What's up? What's up? What's up, everybody? How you guys doing? How you guys doing? Happy Monday. Your Monday like my Monday? Oh, look, my shirt is matching my logo. Oh, didn't even plan that. Anyway, Jeremiah Davis here, the funding coach with Monday Fun Day, where I give out free and funding tips. Today's topic is startup business funding. What is startup business funding? Okay, a lot of people call, and there's a lot of misinformation out there. I covered this before, but I thought it was important to cover again. Listen, there's money out there. Everybody, you can access the money to start your business. You can access the money to grow your business, all right? But you have to understand that the banks have not changed their rules and how they lend in probably 50 years. Okay, they're still assessing the risk factor. They're still assessing your fundability, your credibility before they give you cash money. So a lot of people are out there saying that you can get a business loan with business credit. Now that's not exactly true. Okay, you can access other funding options with business credit that you may not be able without business credit. Okay, a lot of SBA loans will require you to have good personal credit and good business credit, and that score model that they look at is called the SBSS score, and it's a combination of your personal credit score and your business credit score. Now they're looking for like a 160 of that SBSS score to get you a business loan, but you still have to qualify, meaning your business still has to be fundable. You have to be in business, you have to be generating revenue, you have to have your business financials in order, and you need at least 2 years, sometimes 3 years of those business financials, tax returns, profit and loss, balance sheets, etc., to even access that type of funding. So most of the other funding, you still have to have a PG. Okay, whether it's a business loan, equipment loan, real estate loan, or a personal loan, they still require you to show them that you are responsible and you can pay the money back. Okay, they're not. I use this as a litmus test. When somebody calls me for funding, and they go through the gambit of what they're trying to do and what they're working with, generally I say to myself, well, I wouldn't loan you any money. And, if I wouldn't loan you any money, the bank for sure is not going to loan you any money. Okay, that's what I'm talking about. It's just basic stuff like, people call me and talk about they want to do this and this and this, and they say they don't have any money, they don't have good credit, they don't have any assets. You got to come to the table working with something. You got to be working with something. It's just not possible to do it any other way. Okay, and I'm gonna go over a couple of these startup business funding options with you, so you will have the information. All right. Another key point: if you are starting up your business, you need money for a startup. You need to find the right lending institution that works with startups. Not all lending institutions work with startups. That's a huge theme, because you can just go around to different banks applying, with a business plan and an idea and this, that, the other. All they're looking at is the bottom line. What's your credit look like? What assets do you have? How as the bank going to protect our money that we give to you and make money on it? Okay, that's the key point right there. They're not doing it because they like you. They're not a charity. They're in it to make money. Okay, so if they cannot check off all the boxes to minimize their risk in lending you that money, you're going to get denied. Okay, simple as fact. Okay, so what are some of the types of funding that you can get for your startup? Let me go through a couple of them. Okay, let's see. Well, you have an SBA loan and a micro loan. You get these type of loans from local entities, nonprofits in your community, And they have usually a class or a course that you have to complete. Could be anywhere for several weeks to several months. And those classes usually consist of things you need to know about running a business. You know, bookkeeping and marketing and product information, just little things like that. But those loans usually only go up to maximum of $50,000. On the average, a micro loan is only going to be about $13,000. So, but it is an option. But as usual, you might have to have some collateral. You might have to have, some skin in the game. Okay, or you have to meet certain criteria, like being a minority or a woman or things like that. Okay, that is, a loose term is a SBA 7A loan. But they're not easy to get. You have to really work for it. You have to be committed to the process and get those. Okay, or the SBA 7A is, like I said, it's more difficult. The micro loans are a little bit easier, but like I said, you have to meet the criteria that they're looking for, which is usually minorities or a woman in business. Other types of startup funding is friends and family. Can you borrow money from your friends and family? I wouldn't even ask, but that's an option. Credit cards. You can get a bunch of credit cards if you got good credit, and then max them out and take all the cash out and pay the high interest rate on the cash advance to fund your business. I would advise against that. All right. There's no scenario where that's a good idea. Okay, so don't do that. Okay, but that's an option. Personal loans. Now, here's what I'm talking about. This is where I try to direct people the personal loans. All right, but the qualifications to get a personal loan is all going to be based on your credit score. You can at least a 650 to 660 or higher, and at least $50,000 annual income. Now, some banks will consider household income. I work with a number of banks that will take household income. So if you and your spouse are both working and you're trying to start a business, a food truck or what have you, a restaurant, it doesn't matter what kind of business, trucking business, it doesn't matter. It's all the same. You can go to a bank with decent credit and decent income and say, we want, $25,000 credit loan. Personal loan, signature loan, no collateral. All right, it'll be low teens on the interest rate. The higher your credit, the lower the rate goes. But they're only going to give you enough that you can afford. Okay, so if you and your spouse make $40,000 each, and the household income is $80,000, you might get $50,000. They're not going to go too high without collateral. Okay, they're not going to take that risk. It's too risky. Okay, then that's not going to do it. All right. You can do asset-based lending. So if you have equity in your home, you can get a home equity loan, draw out that cash, and put it into your business. A lot of people do that, but that's starting all over with your mortgage again, or getting a second. So those are things you need to take into consideration. Also, I do loan stacking, basically. So I don't just go to one bank and get personal loans. I'm going to go to 3 or 4 different banks and get you that $10,000, $15,000, $20,000 3 or 4 times. Now, the amounts may vary. The terms might vary from bank to bank. And yes, you have to make individual payments for each bank, but you will have the working capital you need. And then if you sign up for my coaching program, I'm going to show you how to manage the money, put the first 12 months of payments aside, and use the rest of the money strategically to invest in your business and grow your business. So hopefully within 12 months, your business is making enough income that you can pay that money back in full or put a big dent into it. So that's the preferred method that I would say for startup funding. Excuse me. Another option is crowdfunding. Crowdfunding is very popular, but excuse me, it usually means someone is going to invest in your business for some type of return. So they're looking for 3 to 5 times the amount they invest back within 3 to 5 years. or they're going to want equity in your company. They might want, you know, 20, 30, 40, 50%. I've heard someone got approved for $1 million in crowdfunding in exchange for 49% of their business. Yeah, so that's the type of thing you have to consider if you're going to go that route when you're looking for startup funding. Okay, there's grants. There's grants. There's grants for small businesses. There's grants for veterans. There's grants for women. You know, I don't do grants, not yet. I'm thinking about adding it into as an add-on service, but those grants are very highly regulated by the government or the private foundation that gives those grants away. You have to account for every penny of that money that you spent, but you don't have to pay it back. So those are 6 quick startup funding options that you could possibly go with. So that's, listen, my preferred method is the personal loans, right? If your credit isn't 650 or higher, get your credit fixed, okay? If your income is not over $40,000, $50,000, I mean, you might, I don't know if you live alone or whatever your situation is, but your minimum income has to be at least $40,000 to $50,000. That's not non-negotiable. If you make under that much and your credit's below that, you're looking at a high interest personal loan. Those high interest personal loans go all the way up to 35% interest, okay, because you have bad credit, all right, or not so perfect credit. What's up, Gabe? Thanks, bro. Thanks for watching. But yeah, so when you build your business credit, that's what's happening, right? A lot of people are listening to all these people online talking about get your business credit in 90 days. That's not really how it works, okay? If you're getting it in 90 days, most likely you're PGing every card that's in your business name, and that's not real business credit. That's a card, a personal card in your business name, okay? So that's what you're looking at right there, is a personal card in your business name, which is not the essence of business credit. Business credit is a lines of credit in your business name attached to your EIN number that is not attached to your Social Security number. So if you're signing your name and adding your social, that's not business credit. Okay, that's it. You can still sign your name, but it must have your EIN and not your social on those loan applications or those credit card applications. Okay, but when you go to a credit card company or bank and ask for that, they're going to do everything they can to get you to do a PG. Why? Because if you default on that, they can come for your assets, sue you, take you to court, and if it's a large sum of money, they might take your house or your car or whatever they can to recoup their losses. So please, please, please don't be deluded by thinking because you have some cards in your business name that you have true business credit. All right, don't be deluded in thinking that because you have an 80 paydex score on the business credit report that you're going to get access to $100,000. Okay, quite frankly, I can give you right now the standard protocol for all business funding. The standard protocol for all business funding is you need to be in business for 2 years. Your business needs to make $100,000 a year. And you need to have the 2-year tax returns and financial documents, as well as good personal credit. Okay, so I've had people come to me, and I've told this story before, that they made $4 million a year, but they had a tax lien, and both the owners had under 600 credit. It was in the 500s, 550s, and they was trying to get $500,000. Now, here's the crazy thing. I got them $500,000, but it was MCA loan, and they was going to pay back $750,000 for that $500,000. They thought that was a joke, and they was insulted. I said, listen, you got bad credit, okay, and you got a tax lien. So you're lucky that anybody offered you anything, okay? At the end of the day, they didn't accept it. But my point is that just because they had bad credit and a successful business, they got denied for traditional business funding. So don't think that you just can have one piece of the puzzle and you're going to get access to cash. Banks are not giving away money just to be giving away money. All right, they're not. You haven't outsmarted the bank. Okay, nobody has outsmarted the bank. The banks know what they're doing, and they're doing it good. They making money hand over fist. How many places in your community you see new banks branches popping up, new constructions? That means they're making money, and they need more locations to make more money. Okay, the bank is not giving away money because you got a good business plan. They're not giving away money. The only way they're loaning money is to make money, and they're making sure that you're going to be able to pay that money back. Okay, so don't. If it's too good to be true, it is. It's not true. Okay, so but if you have the right formula, and I'm gonna give it to you right now, the right formula for startup funding, personal loans, right? This is the way to go. Why? Because you get low interest rate term loans, and usually 3 to 5 years, monthly payments. Okay, and if you call me or you partner with the right person, a broker like myself that does what I do, it's very common for me to get people anywhere from $50,000 to $100,000 in personal loans that they can use to grow their business or start their business. All right, and that applies not just for a brick and mortar or online business or anything like that. I'm talking about food trucks, dump trucks, tractor trailers. Okay, and here's the thing: you leverage all these resources so you can get access to more money. For example, you're a truck driver, right? And you're working for somebody else driving their truck. You want to be an owner operator, okay? You need your own truck. All right, how do you get your own truck? Those trucks are used. Good used ones going to be $100,000. Okay, so what do you need to get that? Well, you need an equipment financing loan. If you got good credit and you got some money in the bank for a down payment or something like that, you can go to a truck dealer and they'll probably finance you. All right, but if you don't have those things, then you come to someone like me. Then I'm going to show you how to get that piece of equipment by leveraging the different funding options I have. All right. First thing, I have equipment lenders that will give you that equipment for a lease to own option on a 5-year, 60-month term. Okay, but you have to have it the first to the last month's payment as a down payment. You on any type of equipment it is. Okay, just a rough guesstimation. If it's a $100,000 piece of equipment, you need at least the payments are about $2,500 a month. So you need at least $5,000. Plus, you need all the other related costs, insurance, DOT tags, all those things that go along with it. You have to come to the lender with all your ducks in a row. Okay, and if you are, say, you're owner operator, but you're like a 1099 for a trucking company, you need to have your money. First of all, you need to have that in a business name because it's a business loan that you're going to PG. But you need to have it in your business name that they pay your business, not you personally. There's multiple reasons why you should do that. You pay less taxes and things like that. So, corporate taxes or business taxes instead of individual personal taxes. But when you go to a financial institution and apply for funding, they're going to see that, okay, there's business bank statements, business tax returns. Okay, how much money you want? You making $100,000 a year? Okay, we can finance your tractor trailer. Okay, and then you can repeat. Why get one? Why don't you get one now? Wait another 6 months, 12 months, get another one. Next thing you know, you got a fleet of tractor trailers. You got people working for you. Okay, but you have to know what all the pieces to the puzzle are required to get access to that type of funding. Okay, and most people coming with equipment financing, they don't have any seed money. They don't have the down payment. So I redirect them back to a personal loan if they can get qualified, get them 25, 50, up to $100,000. Then tell them to go find a truck that meets the criteria, right? The equipment cannot be depreciating to the point the asking price is more than the market value. The banks are not going to give you more money than the equipment is worth. Simple, right? Okay. So once you find the right piece of equipment, right, you're going to get the bill of sale. You're going to get the what do you call it, the sales slip. All that stuff. And we're going to do an app. We're going to send it to equipment lender. They're going to come back and say, okay, what's your bank statements? You got the money, the down payment money. You got insurance. You got everything. You got your DOT tags and license, your CDL, all those things that you need to operate that truck and that business. Or if it's a food truck, you don't need a CDL, but you need to have something to show them. I've done gym equipment. Somebody wanted to open a gym during the pandemic, and they wanted $100,000 worth of gym equipment so they can open their gym. I've done Escalades for transportation businesses. I've done restaurant equipment. Outfitted the whole restaurant from fryers and ovens, tables and chairs, knives, silverware, all the things you need, linens to open the restaurant. Okay? And they will fund that. They will do that. But you just have to have your inventory list of everything you need to get started and opened up. Okay? And you want to get open as fast as possible because you have to start making payments within 30 to 60 days of securing that loan. What am I getting at? I'm getting at all these other types of funding products require that you have some skin in the game. Okay? You need to have some skin in the game. All right? They're not going to finance your whole project. Okay? That's not even a thing. Nobody does that. Okay? Say you want to do real estate. You know the formula to get into the fix and flip or fix and hold? I do. I know what the banks are looking for. Whether it's your first time or your fifth time or 10th time, you need to have some seed money. Okay, there's a certain criteria that's not often publicized of what a hard money lender is looking for when they want to loan money for real estate investment. Okay, and that applies to residential, multifamily, single family, commercial, all those different type of real estate products. Okay, and then a lot of lenders, they only operate in a niche market. There's only some lenders, they only do commercial. Some lenders only do residential investment, the fix and flip and fix and hold, because they want their money back, and plus interest. Okay, so the real estate, you need to have 10 to 20% down of the purchase price of that building or that property. All right. I would err on a ladder of the 20% because if it's your first time, they're not going to be comfortable taking a risk on you at 10%. But they will give you that 80 to 90% of the purchase price and 100% of the rehab cost. Okay? And your credit is not a factor if you got that 10 to 20% down. And it has to be under your LLC, a business entity. Okay? Now, and then you have to have a rehab budget from a third-party contractor. You can't just, you got to have all your ducks in a row, all the pieces to the puzzle. Okay, they're gonna want to see that rehab budget, and then they're gonna want to see the comps, the comparables of that building, similar square footage, features, bathrooms, bedrooms, whether it be residential, office space, square footage, things like that. Location, the comps are usually within that same block, 2-3 block radius, and they want to see what other similar properties that are fixed up have sold for. And what they're looking for is 75 at a minimum, and that's real low. I would go much higher to $100,000 in after rehab value, ARV. You have to have at least, so hypothetically, which I've explained this before, property costs $100,000. You put $25,000 into it. It needs to be worth $200 to $225 or more after rehab. Okay, and how they're going to test the value of it from those comps, from those comparables. All right, how much they're going to tell about the rehab budget from the contractor. If it needs plumbing, wiring, roofing, paint, whatever the case be, you got to tear down walls, you got to put a new kitchen in, whatever all that cost is part of your rehab budget. You need to come to the table with all that. Well, you don't have the 10 to 20%, right? That's $10,000 to $20,000 for a $100,000 property. Then we go back to the personal loans, right? Get that money, put it in the bank, let it sit there, give you the formula Go find a property that meets the criteria. Come back to me with the rehab budget and the comps, and then we can go to the hard money lenders and get you the money that you want to and start your real estate business, your first fix and flip or fix and hold. Okay, right now it's crazy because the housing market is it's a seller's market, it's a buyer's market, but if you're not ready and you're thinking about doing this, now is the time to get ready. All right, get your credit up to par, right, and then I can show you how to go to the bank and get a line of credit for your real estate business, right, and use that line of credit for future purchases and to build up your real estate portfolio. Okay, that's what I'm saying. Once you have good credit and then you can start building business credit, you can access a lot more stuff. You have more options to finance your project, your business, your trucking business, or your food truck business, or your real estate business. The principles of business are all the same. They're universal. All right, you got to know what you're doing. You got to have all the pieces to the puzzle, and you got to have some skin in the game. It's that simple. All right, the quickest way to get some skin in the game is with personal credit and income, and get you $50,000 to $100,000 and put it in the bank, and then let's come up with a plan to see your vision, your dream of being a business owner, an entrepreneur, a food truck vendor, a restaurant owner, a tractor, owner operator, whatever the case may be. And that's how we go. How are you going to go from A to B or A to Z? How are you going to get out of the 9 to 5? Right? You got to have a plan. You got to know what you're doing, and you got to have all the pieces to the puzzle. That's it. Okay. Startup business funding. Startup business funding. All right. Let me run through them right again. Before I close out for the day, you got SBA loans and microloans from nonprofits. Those have to come from the local community that you live in. You have to do some research to find a nonprofit that does the micro loans. Don't get excited because they're gonna make you jump through some hoops. But you can get up to $50,000, but you might have to have some collateral for that. Most of them around $13,000. Okay, you got friends and family. Yeah, you got credit cards. Credit cards, like I said, PG with the business name on it. Personal loans. That's why I just got done explaining. Crowdfunding and grants. Those are the most common 6 top startup business funding options that are available. Okay? All right. I hope that was helpful. I hope you guys got some value out of it. Go ahead and share this with anybody and everybody. Follow me on YouTube, Business Funding Now on YouTube. Like my Facebook page. And book an appointment. Give me a call. Run your idea by me. Let's come up with a plan. Okay? I know where the money's at. I know how to get the money. I've been moving money for 20 years. And it's one shape or form or another. There's money available. The banks are still lending. They want to lend money because that's how they make money. All right? But you got to know what they're looking for. Or if you don't know, you better call me because I know. I know the criteria. I know the advantages, the disadvantages. I know what it's going to take to get you approved. So I'm not going to apply on your behalf until I know you're going to get approved. Okay? Now, how much you're going to get approved for? I don't know. Depends on your credit and income. But I know how you can take that money, even if it's $25,000. We can take that and make it into $100,000, $200,000. So, yeah, okay, get the right information, get your ducks in a row, and let's get this. All right, my name is Jeremiah Davis. I'm the funding coach. Peace.